Hey everybody, it's John Burke of Burke Co. along with Foster Real Estate Group, and I'm actually going to pause our ongoing look at the rental market. We're going to get back to that. There's going to be 2 more installments, so if you've been following that. But the pause this week is going to make sense in relation to that, because I often say to people, your vacation home is not purely an investment, and it's really important to understand it that way. But I know for people, and especially people who rent, there's an aspect to it in which it is an investment. And little known fact, I have a degree in philosophy. Would you like fries with that? I guess I have to tell you that. Real estate, there were a few things that I did not know about real estate as an investment before I got started. They're really simple things, actually, surprisingly simple. But when I first heard them, it kind of changed how I thought. I just want to take a look at 2 of those today. Okay, for simplicity's sake, in the examples I'm going to talk about today, we're going to assume that you're renting the properties we're talking about. It's going to cover all of your carrying costs, taxes, insurances, financing, etc. over the course of the year. If you want to get into the specifics of that, I actually have, this is like my pride and joy. It's not the prettiest spreadsheet in the history of the world, but I have a spreadsheet that I've kind of put together over the years that does analyze investments. If you want to look at everything on any particular property, I've shared this with so many clients at this point and would be happy to share it with you, so just reach out. Now I'm in front of the NJ Realty mural from when Long and Foster used to be a little tiny office called NJ Realty. The first example is this. Suppose you bought a property for $100,000, right? And suppose you carried it, all your carrying costs over the course of the year, and you were fortunate. The market was really good. And at the end of that year, you're able to sell it for a profit after you paid everything. Total price, $110,000, so $10,000 profit. What was your return on investment? And my immediate thought when I heard that question was 10%. And that's where I was told I was probably wrong, right? Because when you buy real estate, it's one of the few places where you get to leverage a lot of your money. For a typical person, you cannot get leverage where by only putting 20% down, you're able to own a $100,000 asset. So when you sell it for a $10,000 profit, your return on investment, since your carrying costs were covered over the course of the year, is on the $20,000 that you put down. So in reality, your return there was 50%. Mind blown. All right, and I was going to lay this out, but my videos are far too long, so I can show this to you with my spreadsheet if you're interested. But we'd all be very, very rich if we could find the exact top and the exact bottom of any market. But the reason that's so difficult is that bottoms and tops tend to happen very, very quickly, right? 1 second it's at the bottom, and then it's already moved kind of far away from the bottom pretty fast. Then you get a more gradual progression over time. Same thing at the top. There's a sudden drop, and then you get a gradual progression over time. So I was just running numbers. If you bought $1 million property 6 months ago at 3.5% on a 30-year mortgage, or you bought, the same property now for $800,000 with a 6.5% mortgage, and then 5 years from now you sold the property, say at $1 million, right? It got back to that $1 million that it was at 6 months ago, 5 years later. You actually will have done better on the purchase with the 6.5% mortgage. So I know right now everybody is very thrown off by these interest rates and they feel like they missed something. But as they continue to deflate prices, the opportunity might actually be now when inventory is better, you can buy on your own terms, you're not competing with as many people, and over a certain amount of time, you actually do better with those purchases now because you're paying less money, you're financing less money, and when you sell, you're picking up more equity. So if you want to see that, if you want to talk about that, nobody wants to be interested in real estate, it seems right now. It's getting very quiet, and when everybody wanted to be buying, maybe it was a good time to sell, and right now, I actually think it's turning into a very, very good time to buy, but you have to see things correctly and think about things correctly, and you have to know what your goal and your plan is, and we can help you with that. So I would love to talk about this with anybody. I'm trying to keep it short. John Burke for Burke Co. along with Foster Real Estate Group, and we'll see you next week.